Well, hello everyone, and welcome to our regular podcast. There's a lot going on in markets, and we get record highs here and there, all over the place. But before we get on to that, let's talk a little bit about remember the 6th of November. No, we're not a day late for the gunpowder plot. This is much more important than that. This is, of course, our debut live in-person event, the Sharesify Wealth and Retirement Show, coming up on the 6th of November. We've got a really good lineup. We're adding new people, new speakers to the roster every week. But just to highlight, we have recently got confirmed that Richard Stone of the AIC will be presenting, so you don't want to miss him. And also Laura Fole, who's recently taken over as lead manager at Lord Debenture. That was after retirement, wasn't it, James? Remind me who retired.
James Henderson, yeah, long-serving manager.
James Henderson, yeah, and they were in tandem for a long time, but now Laura Fole's in charge, and she'll be presenting at the Sharesify Wealth and Retirement Show. And also, we've noticed there's an awful lot of discussion around emerging markets at the moment, and particularly Asia. So, interestingly, timing or not, I don't know if it was good timing or just fortune, but we had a really fascinating chat, Ian and I, on Monday with Emily Whiting of JP Morgan. And we were talking about emerging markets and about India and China and various other different markets out there. So definitely plug into that. And we're also talking specifically about India tomorrow. James and I will be chatting to James Tom of the Aberdeen New India Investment Trust. So don't miss out on that. Anyway, without further ado, let's talk about those record markets, Ian. You've got some details.
Well, yes, Steve. Looking at the S&P, I mean, it's been trading sideways since it hit that high in June, and this week and last Friday, it's just smashed straight through that. In fact, it's up 6% in 4 days. It was up 1.5% on Monday, and it's up another 1.7% last night. So fully risk on, I have to say. These markets are fully risk on and rewarding companies, as usual, rewarding companies which deliver.
I mean, I suppose we've had some really good results from the likes of Alphabet, from Amazon, went down really well, the markets. Some soggy results from some of the other big tech companies. But I mean, Amazon and Alphabet in particular, and AMD as well. Oh, that was a bit soggy, actually. But so, I mean, we've had some very strong results, which has probably given the markets a kind of a general lift.
Yeah, and actually even duller sort of income stocks, the kind of stuff I like, you know me. We've had decent results from BP, Shell, Legal & General. They've all gone down quite well. They're big names. Real staples in UK equity income funds, and also with retail investors, they're popular. The big disappointment this week has been HSBC, actually, which kind of failed to launch. They did say they were going to buy back another $1 billion worth of shares, which the jury was out on that. That wasn't a given. They suspended buybacks Q3 last year, because they were buying in the minorities in Hang Seng Bank. So they came out with, and you'd think, you know, the way the market is, $1 billion buyback, great. Actually, the results, although they weren't great quality. And I think people are just taking a bit of money off the table. As I said in a previous podcast, it is the best quality. It has been a great performer. Those results, I don't think, lived up to expectations. And of course, overnight, we had, expectations were pretty high after that IPO, Steve.
Yeah, you speak about headline earnings. Of course, I mean, so many investors bought into the IPO of SpaceX. These were its first ever earnings as a listed company. And I think we can sum it up with going, well, they were kind of all right. I mean, ultimately, the numbers, the operational side of the business looks like it's going gangbusters. Of course, there's no sign of any profits. But I think what really dragged on the stock price was the fact that there was so little in the way of forward guidance. No one really knows. No one's any of the wiser really about what the kind of roadmap looks like. There was no conversation about any kind of merger with Tesla. So, I mean, they were very soggy overnight, down about double digits, I think 10%, 12%, something like that. So I mean, we're down underneath the $135 IPO price, now about 115, something like that. But it's just a company you can't really make a sensible valuation judgment call on it at the moment, because it is really about the investment, how it might look in 5, even 10 years time. So I mean, good luck trying to analyze how you do that, because I struggle. But we had AMD as well, very interesting, very strong results, but again, another victim of super high expectations, and it didn't quite have enough oomph to suggest that optimism should be heading higher. So that was a bit soggy as well. But that was balanced with some very strong numbers and very good share price reaction from Arista Networks, which is a company we've written about a few times.
Nice one. Yeah, actually, one other factor I noticed with SpaceX is I think the lockup expires today. So
It's
people
tomorrow, actually.
it's tomorrow, is
It's
it?
the 6th of August. That's
I
right.
knew it was
Just
this
to make,
week. Yeah,
just
I
to
knew
make
it was this
everyone
week.
clear about this. So these are employees, and they had share options and stock at IPO, but they were locked into selling them in the market until this point in time. So there's a theory that there could suddenly be a big flood of new stock comes onto the market tomorrow, which could dampen appetite for the stock a bit more on the share price. But we'll see how that goes. I mean, it's a temporary blip. It's not really an issue for the long-term story.
So despite that sell-off, James, UK's very own listed space tech fund, Seraphim, has had a good week.
Yeah, absolutely. And so it's invested over 21 million of that 137 million they raised through a C share issue back in May, which I think was one of the biggest trust raisings for many years. So they put the money to work with two existing portfolio companies, Pixel and Xeno Power. Now, we've written a story on the website, so if you want to know more about what they do check out that story. Some other big news was the kind of mixed picture from consumer staples this week, wasn't it, Ian? So Coca-Cola HBC upgraded FY26 guidance, good volume growth of World Cup boost, which is actually a holding in the Aberdeen Equity Income Trust. And we did a recent podcast with Ian Pyle where he talked about the bull case for that stock. But the other day, AG Barr, a bit of a howler. So usually a very reliable stock, but warned of supply constraints that had hit second quarter sales. It seems like those issues have been kind of fixed, but a rare blip from a company with a very good
Bad
record.
timing as well. Bad timing, James, because they've just launched a new advertising campaign. I've seen it all over the TV about advertising various soft drinks. I don't know what flavors they are, but yes, it seems a bit unfortunate, really.
Yeah, I've seen those. And James, you're too modest to mention it, but that tweet or X, that X post has received 6,600 views, which is, I think, the most we've ever had for a single story.
Yeah, absolutely. So lots of interest, great brands. I mean, Iron Brew, Rubicon, Boost. So a lot of interest in that stock. Sticking to kind of the FTSE 100, we've had another beat and raise from Next, sort of ever reliable retail star turn. But one of the big topics this week was that AstraZeneca talk of a merger with Bristol Myers.
Yeah,
the market
what was
didn't
that
like
about?
that at all. Yeah, a lot of skepticism about that. I think they've both got big sort of cancer drug pipelines, but the market did not like the idea of another transformational merger with all the attendant
James,
integration risk.
Do you think that's simply a case of the market doesn't see the economies there, or do you think it's also about they're very sceptical that it will get past any monopolies inquiry?
Yeah, I think sort of regulatory issues as well, and also it was a bit of a pivot if they do it because Pascal Soriot said they didn't need M&A to meet their targets. So I think that sort of caught the market off guard, and also perhaps a fear that if Astra pivots more to the US, will it sort of ditch its London listing? I think that made investors a bit skittish as well.
Well, it did have a big listing in the States, didn't it? I think in June.
That's right.
And as you say, these mergers, they tend to take management's attention off the day-to-day business, and that's and really do they have a positive outcome on the share price? But Steve, you're looking at a few more big names coming out.
Honestly, I mean, we're right smack bang in the middle of sort of peak earnings, really, for certainly in the tech space. So we've got this evening, we've got SanDisk, which is possibly investors' favourite memory stock. We've got Western Digital, we've got Shopify, Uber, AppLovin. There's a whole bunch of tech companies alongside companies like Disney, Uber, as I said, and Eli Lilly, all out tonight. Tomorrow we've got Cloudflare, Datadog, Airbnb. Now, do you remember Airbnb when it was a thing? It hasn't been a thing for ages. I've no idea how it's doing, so it'd be interesting to find out tomorrow.
Yeah, absolutely. And James, another big consumer name out tomorrow.
Yeah, we've got Johnny Walker and Guinness tomorrow, Ian. So Diageo, Dave Lewis setting out a strategy.
That's a mixture.
Day. Yeah, that's going to be a big one. And then PZ Customs on Friday. So this is Imperial Leather, various soaps and other sort of household brands. And across the pond, we've got Monster and Shark Ninja, so two sort of go growth stocks. Monster Beverage is one of the the best performing stocks of all time anywhere, I think. So we'll be keeping an eye on those two.
So I suppose the big thing with customers is always about look out for the naira, isn't it? It's the Nigerian currency, because they sell so much of their stuff into Nigeria.
Yeah, that's right. It's been sort of Achilles' heel for many years, but there's a sort of broader turnaround going underway with that stock. So we'll certainly do something for the web, I would imagine.
Just to go full circle, I mean,
Shark Ninja. Sorry,
Steve. Sorry, Ian. Yeah.
I was to say, we haven't looked at Shark Ninja for absolutely ages, have we? But that was such a hot stock. Talk of Airbnb. You could put that in the same bracket almost.
Yeah, I mean, I just wonder if it's one of those situations where its products have just been copied, and there's just so many generic brands now in the kind of air fryer market, in the mixer market, and those kitchen appliances. I mean, does it really have that kind of price protection? And the market seems to be saying probably not.
Yeah. Can I say maybe it was a flash in the pan? Thank you very much.
Boom, boom. Just to go full circle, we were talking at the top of the show about emerging markets. So we've looked in depth at China-based trusts recently, and to see whether there's an opportunity there. We've done that even more recently with Japan, and we will be looking at India later this week. So check out our website for those features.
Yeah. I think that just about does it for us, guys. We're out of time. As I say, we got another fascinating podcast tomorrow. So stay tuned for that, and we'll see you soon. Bye for now.
Bye.